Good morning and welcome to Vista's 2025 Investor Day. Let's start with a quick recap of our growth story. Since our Investor Day in 2021, we tripled in size with total production growing from 39,000 to 114,000 barrels of oil equivalent per day in 2025. We quadrupled adjusted EBITDA from $380 million in 2021 to approximately $1.6 billion in 2025. We are now the largest independent oil producer in Argentina and have also become the largest oil exporter in the country. We are now entering a new phase of growth, one that builds on what we have achieved, taking Vista to the next level with a larger scale. Our next phase is self-funded and is set to deliver more profitable growth and industry-leading margins. This will generate an increasing amount of free cash flow. We have done the work to de-risk Vista's next phase of growth, and we are now ready to raise the bar again. We de-risk and acquire new acreage. We secure drilling and completion equipment, as well as treatment, transportation, and export capacity. We are fully funded to deliver double-digit growth. We have consolidated one of the most experienced, committed management team in the region. So where do we see ourselves 5 years from now? By 2030, we expect to be generating $1.5 billion of free cash flow per year. We have the asset, the capabilities, and the committed team to become a cash-generating machine ready to deliver sustainable long-term value. By the end of the decade, we expect to produce over 200,000 barrels of oil equivalent per day, 33% above the forecast we shared during our 2023 Investor Day. Operational excellence and sustainability remain at the core of everything we do. Since our last Investor Day, we have made very good progress in reducing carbon emission intensity, developing carbon credits through our nature-based solution projects, maintaining a strong safety track record, and proactively engaging with the local communities.
Since day one, we have worked hard to build a company of high standards that is fit for the future. Our goal is to maintain our total recordable incident rate below 1, in line with industry best practices. We have achieved this target over the last 5 years. The focused execution of our emissions reduction strategy has allowed us to achieve a greenhouse gas emissions intensity in our oil and gas operations, including Scope 1 and 2, of only 7.5 kilograms of CO2 equivalent per BOE in 2025. This ranks us among the first decile worldwide and more than 75% below the global average. I am standing here in Rolonque, our flagship MBS project, surrounded by millions of trees that didn't exist just 3 years ago. This is a clear testimony of our positive contribution to the environment. We have sized our MBS project so that the carbon credit generated by AIQE matched the size of Vista's residual hard-to-abate emissions in 2026.
Our focus on productivity is demonstrated by outstanding well performance. When we compare Vista's wells across Vaca Muerta, our productivity consistently exceeds that of peers, reflecting the quality of our assets, our best-in-class operating capabilities. In the first 6 months of production, the average Vista wells delivers approximately 200,000 barrels of oil, normalized to a 2,800-meter lateral length. That is a 24% above the Vaca Muerta average and a 48% above the Permian average. Vista's long-term growth is supported by its large, high-quality, short-cycle well inventory. Today, we have around 1,300 wells yet to be drilled, providing an inventory of at least 10 years with break-even prices of $45 per barrel. Looking ahead, we plan to continue de-risking our acreage and see additional inventory upside from untested landing zones within our existing blocks.
Growing our inventory is only part of the story. Another key driver of our competitiveness is how efficiently we develop it. As we continue expanding our drilling runway, we're also focused on further reducing well cost. In 2024, our average drilling and completion cost was $14.2 million per well. Today, our D&C cost has been reduced to $12.3 million. By the end of 2026, we expect to reach $11.7 million per well and $11 million by the end of 2028. These gains come from innovating and adopting new technology and optimizing processes. These combined efforts have made Vista one of the lowest cost operators in Vaca Muerta. We never stop innovating. Over the coming months, we will implement new cost reduction initiatives, such as moving our sand washing plant to our core hub to further reduce sand logistic costs. During 2026, we plan to relocate our sand plant to our core development hub and source sand from nearby sand mines. By doing so, we expect to significantly reduce transport distances, lowering both sand transportation cost and our footprint.
Building on our strong foundations, our solid operational expertise, large asset base, low unit costs, and unique culture, we are ready to pursue a new phase of profitable growth. We are planned to tie in between 80 and 90 wells per year between 2026 and 2028, requiring $1.5 to $1.6 billion of CapEx per year. All the capacity needed to execute this plan, drilling, completion, cruise, treatment, transportation, and export, is already secured. This plan will increase production from 114,000 BOEs per day today to 140,000 in 2026, 160,000 in 2027, and 180,000 BOEs per day by 2028. That represents an increase of almost 60% in 3 years, implying a CAGR of 16%.
Our total revenues are expected to grow by 72%, from about $2.5 billion in 2025 to $3 billion in 2026 and $4.3 billion by 2028. We plan to double export revenues from $1.5 billion in 2025 to $3.2 billion by 2028. This means that by 2028, around 3/4 of Vista's total revenues will come from oil exports, up from 60% today. Our cost base remains among the most competitive in the sector globally, ensuring resilience in low oil price environments while maintaining significant upside exposure to higher oil prices.
Our growth plan is expected to deliver solid financial results. Adjusted EBITDA is projected to grow from $1.6 billion in 2025 to $1.9 billion in 2026 and $2.8 billion in 2028. This is an increase of 75%, which implies a 21% CAGR over the next 3 years. During the same period, our adjusted EBITDA margin will remain around 65%. High profitability and strong cash flow generation will continue to strengthen our balance sheet. We expect to deliver self-funded growth while organically reducing net leverage.
As we look ahead, our 2030 vision is clear. As we continue to scale and reduce costs, we expect to deliver strong returns on capital. This allows us to envision a company that, by 2030, assuming a mid-commodity cycle Brent of $70 per barrel, is projected to generate a recurring free cash flow of around $1.5 billion per annum. Vista is still a young company. Yet, in just 7 years, we have become the benchmark for performance in Vaca Muerta and one of the most profitable independent E&P companies in the America. We have the assets, the team, the culture to keep creating value for our shareholders, for Vaca Muerta, and for Argentina.